Prakash Diwan is joining in to discuss a whole host of numbers that have come through for us. Prakash, we're heading into Diwali week, so greetings of the season to you and your entire family. Wanted your thoughts on how to approach a name like Tata Elxsi now. After many years, we're seeing a bit of a slowdown in earnings. If you are a long-term investor in Tata Elxsi, has the time come to sort of move out, or do you keep the faith here?
Good morning, Sonia. So I think Tata Elxsi probably has got that, finally has got that much awaited softness in valuations that could probably start. And if you're a long-term investor, you really don't get worried about this miss in just one quarter. Because what the company is essentially undertaken is a revolutionary mix of so many things that I explained the other day that it probably has picked up the best of whether it's AI, IoT, transformational business, all of that. And some of that is so unique that it has enough headroom for growth, enough runway for growth. And that means that a couple of quarters of stress would probably not, get it so off-road. So I think Tata Elxsi is finally getting within reach for people also to invest, because the valuations have been extremely rich. And if there is any opportunity to buy into at softer valuation, you should, because there's no let up on the business front, and then you should keep the faith for sure.
Prakash, good morning. But for the broader IT services space, what is this? What are these numbers? Because even as for 3 weeks the index has moved higher. I mean, it's about 7% up from the recent lows. The debate has raged whether there is more weakness to come, or this is the final basing now, and things will look better and better. Does Tata Elxsi maybe adds to that debate, not in a positive way? What is your sense for the broader IT services space from here?
So, good morning, Prashant. So, I think very clearly the numbers for Q2 for most of the IT companies, barring, let's say, a Wipro, very clearly indicate that the order execution for this year, calendar 22, is probably not something that needs to be such a big worry factor. The real challenge is going to be how much of deferments and all do you have. Like, we were just talking to the L&T Infotech management, and they're talking about extending the timeline, which means it's almost like a soft deferment of contracts. Now, if that were to start getting a bit broader or deeper, you'll only come to know about it closer to January of 23. So that's going to be the real challenge, Prashant. Till then, you'll probably see a lot of completion on digital, especially things that cannot be deferred and which have been kind of built into the budgets. But the extension of all of that activity beyond December, beyond Jan is the concern. And my sense is you probably are close to the bottom, if not the bottom, and it's extremely difficult to perfectly time that. But IT would probably go through a different cycle once you start hearing about certain other addition of activity around the IT solutions. It's more of outsourced engineering, remote engineering assignments. It's about engagement of a different level, and especially once you have the ability to kind of straddle multiple solutions in larger companies, that's going to work. Maybe consulting takes a softer approach. I mean, it doesn't get the same upbeat kind of a valuation that it did earlier, but some of the larger companies are much more resilient to that. So I would look at IT definitely closer to December. Till then, you could probably have this yo-yo on expectations, and as you rightly said, the debate could probably see some more volatility come into the prices.
Hi Prakash, morning. Butterfly Gandhimathi, now they have a new parentage, that's the Crompton Group. The numbers appear a little bit disappointing. I'm reading out from a brokerage report, domestic brokerage report. They say that they're expecting a muted quarter for all these kitchen appliance companies. We had TTK Prestige as well. And remember, the base here is a high base. How would you approach them from here on? Any read-through?
So, good morning, Nigel. So, I think it's an extremely positive spot that most of these companies are in. Q1 was something where they saw a lot of raw material hikes, and hence there was a stress on margins. And if you recollect, there are certain companies like Storecraft and all which have actually gone ahead and expanded in this dull phase. Now, what this entire space could see post-festive season numbers is that there is economies of scale that some of the players will be able to get, which are strongly branded, which have probably the supply chain in place. And any softness in raw material is actually going to start getting the margins back to at least early teens, if not the mid-teens or later teens. So my sense is there will be a little bit of a pause that you'll see in some of the numbers. And it depends on which cycle the company is. For example, Gandhimathi has a little bit of a soft kitchen sinking that's underway. You've seen that balance sheet getting a little bit of that nudge on the repair side from the new parents, and then that's bound to happen. They would like to kind of get things started on after cleaning it up, and then you'll probably see the growth. But my favorite in that is not even TTK because of the valuation, the rich valuation, though it's a great franchise, but it's Stockcraft. And I think it's kind of come off a bit for you to get into even at this late stage. We spoke about it earlier at about 520 and all. It's gone to that 700 mark, come back. So it's had a share of consolidation, and I think it could do very well from here.